What's up, apes? Welcome back to the 𝗪𝗚𝗀𝗀 daily podcast / video stream of the day. Thank you all for joining us once again. It has been a while since we've been able to be back here with the 𝗪𝗀𝗀𝗀 daily podcast / video stream of the day. So we are very excited to be back with you. We hope you guys are excited to see us back as well. This is one of our favorite things to do, but I have unfortunately been missing the 𝗪𝗀𝗀𝗀 daily podcast / video streams of the day for the past week or so. Very sorry for that. 100% my bad. Basically, been a little bit busy with traveling across the country, trying to relocate the 𝗪𝗀𝗀𝗀 global headquarters from down here in Charlotte to our new global headquarters up in Massachusetts. So it's been a bit of a process there, but it's also allowed me to spend some time traveling across the country, talking to all of you interesting folks out there, which was great for the past couple of days because as you guys have noticed, if you're reading the editions, which if you want, go fucking subscribe. But as you've noticed, we spent a lot of time talking about U.S. politics, one of our least favorite things to talk about because every time we bring it up, we hear from a bunch of you yappers out there telling me how wrong I am. Guys, I know I'm wrong. I'm wrong about everything that I do. I'm used to it at this point. So don't feel the need to share with me every single time because that's going to be an endless stream and you're going to have to quit your day job to spend all that time correcting me. But we had to do it because this is the first election cycle that the 𝗪𝗀𝗀𝗀 has existed. So we felt that it was our responsibility as the largest, most popular, most trusted platform in financial media to come in here and explain to you guys exactly what the economic proposals from our two leading candidates have been so far. Yes, the mind-numbing idiocy is the first thing that you'll notice out of all of these, but nonetheless, it was a good chance to talk about them. So today, what we're going to be doing is actually focusing on a much more important U.S. institution and the economics of a much more important U.S. institution than the presidency. So make sure to stick with us to the end. That's our thought banana topic of the day. So I'm going to be talking about it in about, 10, 15 minutes, depending on how much I yap here today. But nonetheless, that's going to be an interesting one, quite the unique story for us. But before we get into that, we have a whole lot to talk about here. So it was a brutal day for markets on the session. Pretty much everything was in the red ahead of Fed Chair Jerome Powell's speech tomorrow morning at the Jackson Hole Federal Reserve Conference. He'll be up there yapping himself at about 10 a.m. Eastern Time tomorrow morning. By the way, this Jackson Hole Fed Conference, you might be wondering, David, why the fuck are all these central bankers from all over the world being forced to schlep all the way out to fucking middle of nowhere, Wyoming? Well, I'll tell you. First of all, Jackson Hole, beautiful place. I'm sure many of you skiers are aware of how beautiful Jackson Hole is, but many of you fly fishers probably are as well. And that's the entire reason that the Fed actually meets at Jackson Hole, because former Fed Chair Paul Volcker, who was the Fed Chair for most of the 1980s, up for, I believe it was 79 to 87 that he was in the position. I could have those off just a little bit, but whatever. This guy didn't want to host the Fed conference in, New York, D.C., anywhere regular. He was like, I want to do it, but this shit's really boring to talk about, so I really need to be able to go and fly fish at the end of my speech. And so that's exactly why these are being held in Wyoming. Pretty sick story right there. But nonetheless, there's a lot of news that's going to be shared tomorrow, so the market's feeling a little bit nervy heading into that. We could see that by the performance of the WSO Alpha portfolio today. We were down 1.37%. We actually did outperform the NASDAQ index, which was down 1.67%, but we did lose out to the S&P 500, which lost about 89 bips for the session. The Russell 2000 down about 68 basis points. Basically, anything with a higher valuation than the overall index was selling like hotcakes yesterday. It was definitely not the time to be a high PE stock or, a mega cap tech name or a profitless tech name, for example. Those got absolutely hammered. And that was kind of the main driver of the WSO Alpha's portfolio's losses of the day. Now, if we took out this one position, we would have outperformed both the Russell and the S&P 500 as well. But one of our what's rotten names of the day, completely shit the bed, down about 15% before I step on all of our content. We'll get into that in a couple of minutes. But other names that were laggards included names like Tesla, NVIDIA, all the big names, once again, like I said. So, rough day for the market, but the Alpha portfolio did what it usually does and tends to outperform the NASDAQ on down days. Okay, we are up, by the way, 9.64% for the year. I feel like I should mark that. Also, I haven't timestamped this. It is currently 7:05 p.m. on this beautiful Thursday, August 22nd, 2024. So, now that we've taken care of all that stuff that I forgot about in my week of absence here, let's go ahead and get into the banana bit. So, first and foremost, Jesus Christ, this lady, I don't know if I feel bad for her or if I'm angry at her, but Miss Walking 𝗪𝗚𝗀𝗀 Khan of the FTC proves exactly why we've given her that nickname of the Walking L once again. Because the FTC, a couple of months ago, they had this crackhead idea to try to ban non-compete agreements completely, basically, from the U.S. economy. There was no precision, no thought process besides, I don't really like the idea of this, so let's go ahead and get this the fuck out of there. Now, a federal judge has come in and said, FTC, you cannot do this. You are a federal agency. Your job is to enforce laws, not to necessarily create them. So unless Congress or the president signs an executive order or passes legislation that says no more non-competes, you cannot do this. And that is the constitutional process of the United States, and just another piece of evidence as to why we're better than the UK. But nonetheless, anybody who is hoping that their non-compete gets released because of this, hate to break it to you, not going to happen. Go ahead and talk to your old boss. Maybe they'll let you out of it. Meanwhile, horrible, horrific, terrible day for Advance Auto Parts. Usually, these guys are up when car accidents spike as well, so I'm not exactly too depressed to see that the stock is down, but Advance Auto Parts was much more of a novice for the session, down about 20%, because they completely shit the bed on earnings and are selling their wholesaling unit to the Carlyle Group for about $1.5 billion. That sale was actually pretty positive news, but it was overshadowed by the earnings miss, the revenue miss, and the poor guidance. Meanwhile, Alex Cooper, a lot of you out there might be familiar with the podcast Call Her Daddy. I have to say, though, I imagine that the overlap between those of us who listen to the WSO podcast and Call Her Daddy is probably a pretty small group of people, but I'm sure there's a few of you out there. You might be interested to know that Miss Alex Cooper of the Call Her Daddy podcast just penned a $100 million deal with SiriusXM to bring a podcast over there. My question in this is, where the fuck a radio station in 2024 gets $100 million to throw at one girl? So, you know, good for her. That's phenomenal. That's a bigger bag than I will ever see in my entire life. But still, I just hope this one works out. We remember when, you know, Spotify was throwing $100 million contracts at the likes of Michelle and Barack Obama, at the likes of fucking whatever those twats from England are who, like, renounce their royal titles or whatever the fuck those... Nothing boils my blood more than, oh my god, the royal family. But nonetheless, if those podcasts didn't work out, I certainly hope Call Her Daddy does, because they have an actual organic audience, not just trying to basically, you know, ride the coattails of their own previous historical swagger. So I guess that would be my assessment of it right there. Finally, adjusted for inflation, if we take the total amount of U.S. credit card debt right now and adjust it for inflation, we're actually nowhere near all-time highs. So maybe we should all just fucking chill the fuck out on that a little bit. Okay, let's go ahead and get into our macro monkey major story of the day. We are, of course, talking about how we cannot wait another minutes. Yes, you heard that right, another minutes. That's my pun of the day, so apologies in advance for that cringe. But effectively, right now, we just finished the first 10 minutes of a Quentin Tarantino movie. We know how this is going to play out. So when the Fed came out with the Fed minutes yesterday on Wednesday, August 21st, we kind of already knew what they were going to say, and they basically just confirmed our biases. Now they've given us a full frontal perspective on what's going to happen at the September FOMC meeting. Completely, spoiler alert, ruined the plot for us there, but we kind of already knew that this was going to happen nonetheless. And anyway, isn't it the journey that really matters and not the ultimate destination? Let's go ahead and find out. So, what happened? Like I alluded to, on Wednesday, August 21st, the Federal Reserve dropped their Fed minutes from the July meeting. As a reminder, this is from the meeting that ended in July 31st, so everything that we're going to talk about here today was what the Fed stated on July 31st. Before we get into exactly what they said, let's go ahead and take a look and remember where exactly we are in this story. So, what you're seeing here is the absolute psychopathic King to Kyle level roller coaster on interest rates that we've been on. So, we just finished the climb up to the top, and we're finally about to start going over the edge. Now, the big question is it going to be a similar fall as it was rise? Is it going to be extremely rapid and a very steep fall? I certainly hope not. The G-forces might kill us on that one. But nonetheless, we will be finding out soon, because the Fed is going to be meeting on September 18th is when they're going to be deciding the next rate move. This is essentially what they're thinking about going into it. So there really wasn't any surprises within the Fed minutes. So like I said, or like I kind of alluded to, it's a Quentin Tarantino movie. We already knew what was going to be going on here. But the one phrase that the Fed said that everybody with the fucking journalism degree that knows what EPS stands for jumped all over and freaked out about for the day was the following phrase. The vast majority of FOMC participants, by the way, the vast majority observed that if the data continued to come in about as expected, it would likely be appropriate to ease policy at the next meeting. So, classic Fed speak right there. They're speaking as ambiguously as they possibly can. But essentially what they're saying is if the data comes in as expected, we're going to cut rates. And the data has actually come in even worse, which gives it more evidence to be cutting those rates. Not only did the unemployment rate tick up from the July jobs report to 4.3%, as we just learned, the entire BLS should be nuked and completely forgotten about, because they overcounted by about 800,000 jobs, or about 0.4% worth of the unemployment figure. So, it's very likely that a lot of those people have exited the labor force or have found jobs now. There's probably not like an additional total 800,000 people that are unemployed. This is just what they kind of overestimated from the March 2023 period to March 2024. So it's a little bit uncertain, but nonetheless, the point remains the same. The labor market is a lot weaker than we expected, and that is giving Jay Powell and the Fed the balls to finally start cutting rates. So it was kind of a mic drop moment when he came out and said that, but it really just confirmed everything that we already knew. However, it did change up the market's view of the interest rate situation just a little bit. So what you're looking at here is the target rate probabilities for the December meeting. So this is where the market is currently pricing for rates to be at the end of 2024. And what we're seeing right here is the current odds, the Vegas odds, are in favor of a range of 4.25% to 4.5%, or 425 to 450 basis points. And we see that at about 44.4% of the probabilities, basically. So what that means is that the market is currently pricing for about 100 bips of rate cutting by the end of the year. There's only 3 meeting left, so that implies that they are anticipating that at least one of these meetings, there's going to be a cut of 50 basis points. So the current, if you walk through all the charts and kind of look at what the most probable outcomes are going to be, they're expecting 25 bip cut in September, 25 bips in November, and then 50 bips in December as the current market odds. Now at 35.2%, there's still a large probability for only 3 cuts, or 3 cuts of 25 basis points, 75 basis points of total cutting by the end of the year. We'll see if that actually comes into fruition, but if we don't live up to either one of these numbers, that is going to be a huge downside shock to the market. So the Fed kind of has backed itself into a position where they either have to live up to this expectation or they have to provide a shock to market. So either way, between a rock and a hard place, tough position to be in. I guess that's why nobody wants the Federal Reserve chairman job. Now, some other notable quotes that we're going to go over here, and yes, I am going to read these quotes in full, so feel free to skip forward about 30 seconds or so if you don't want to hear them. But the first quote they said is, with regard to the outlook for inflation, participants judged that recent data had increased their confidence that inflation was moving sustainably towards 2%. In other words, we're pretty sure that inflation is on the way out and we don't have to worry about that anymore. Secondly, they said almost all participants observed that factors that had contributed to recent disinflation would likely continue to put downward pressure on inflation in the coming months. Translation: the underlying forces of inflation are continuing to fall, so again, nobody's going to be worried about inflation re-triggering. Finally, and this is a long one, the monthly pace of payroll job gains had moderated from the first quarter, but had been solid in recent months. However, many participants noted that the reported payroll gains might be overstated, and several assessed that payroll gains may be lower than those needed to keep the unemployment rate constant with a flat labor force participation rate. So, translation on that one, basically, okay, so the job market has looked pretty good, but it's probably a little bit overstated. And at this rate, it looks like if the labor force participation rate remains the same, unemployment is going to start to continue to go up higher. So we need to increase the demand for labor by cutting rates. That's essentially what they're saying right there. And so the key thing to notice here, though, is, everybody was freaking out about the miss of 800,000 jobs, or the overestimate by 800,000 jobs. The Fed already knew about this. They were stating this on July 31st, and if you go back as far as March 28th of this year, the Philly Fed was already all over this. So that wasn't a surprise to the Federal Reserve, but it was a surprise to markets that they knew about this and still weren't reacting to it. So it was just further confirmation for markets and market watchers to be pissed at Jay Powell and the Fed for waiting so long to cut rates. That's basically the story of the Fed minutes and the current position of the Federal Reserve. Luckily, we'll get an update on that current position tomorrow at 10 a.m. when Jay Powell starts yapping. So with all of that said, let's go ahead and move into the what's ripe, what's rotten, some stock movers of the day. First and foremost, we have, I can't even believe I'm saying this as a what's ripe name, but we have Peloton up a massive 35.4% for the day. You would think that it's the pandemic all over again with numbers like this. I mean, this company, they went on a murderous rampage, really, killing whatever that guy's name is in Sex and the City, and then that other whatever that guy's name is in Billions as well. Both of these guys, within like a month period, they died on the Peloton bike, and that definitely wasn't great for PR. Remember, the stock blew up a little bit at the time, but apparently they've taken a break from this murderous rampage and decided to focus again on sales growth. That's right. Peloton and sales growth, a bit of an oxymoron if you ask me, but for the first time in 9 quarters, aka 2 years and 1 quarter, the company actually posted year-over-year sales growth. Now, it may have been just as 0.23%, which adjusted for inflation is still negative sales growth, but we don't adjust financial data for inflation for whatever fucking reason. Nonetheless, the actual good news of the report was that gross margin expanded quite a bit. They're at 48.5% for the current quarter compared to 31.3% for the same quarter last year. Biggest reason is because nobody's actually buying more of Peloton's shit. What's happening is the secondary market where you list your Peloton bike on Facebook Marketplace at a 90% discount for whatever the fuck you bought it for. Somebody comes and buys it, and then they sign up for a new subscription with Peloton as a member. That is where all of this additional revenue is coming. It's from secondary market sales and then getting new members to sign up for those subscriptions. So that's padding margins quite a bit, and it's giving markets confidence that this company's turnaround plan might actually work. There was talks about them going bankrupt. I still can't believe they haven't been acquired by a Nike, a Lululemon, maybe a fucking Apple or something like that. Maybe Berkshire Hathaway, maybe Buffett's going to be the new fucking, the new Peloton instructor standing up there with his $300 billion in treasuries behind them. But nonetheless, let's go ahead and move on to our next big stock mover. Speaking of the pandemic, that is Zoom video communications up 13%. Try not to get traumatized. I know we're talking Peloton and Zoom both moving higher. I promise I'm not going to lock you inside with your family once again. I wouldn't dare to torture you like that. But Zoom did decide to torture a whole lot more people by having their products become more popular in the recent quarter. God, there's nothing worse than a Zoom meeting. But nonetheless, sales missed for the quarter, but nobody really cared because everything else was going well. Sales grew just a measly little 2.1% for the year, but underneath that sales growth was positive signs of, again, a turnaround plan starting to work well for Zoom. It's very difficult when you go from 525% growth or whatever the fuck they were at. I think it was 325% annual growth was their top, and then it was 55% annual growth the next year. Now we're at 2.1%, so we really have come full circle there. Obviously, they're not meeting the growth expectations that would justify the current valuation or the old valuation that the stock had, but what they are seeing is underlying fundamental drivers that give us confidence going forward. So, for example, earnings grew 20.3%. So they've been very kind of focused on their cost structure, making sure that they're able to manage that and keep it relatively minute compared to their revenue growth. And that's exactly what we saw in the last quarter. But that wasn't even the best part. Free cash flow grew by 26%, and operating cash flow grew by more than 30%. So investors are saying, all right, these guys, they might not have the sales growth, but they fucking know what they're doing. They got a great CFO, whoever it is over at Zoom. Apparently, he's doing a great job. But Eric Yuan, the CEO, came out with some very positive comments during the conference call as well. For example, they saw a 7% increase in large corporation spending. So these are current clients or clients of Zoom, that companies that were clients of Zoom within the last year. They increased their spending on the platform by about 7% on average. So that tells the market these guys have a good product. Once they get a customer, customers tend to reinvest and, buy the more premium tiers or buy additional features or whatever it might be. But that got markets very confident. They also grew the number of Fortune 500 and Global Fortune 2000 customers as well. Once again, giving confidence that this is the enterprise's choice when it comes to video conferencing. Okay. Moving on down into the what's rotten names for the day. This is what really killed our vibe over at WSO Alpha, really melted the portfolio for the day, and that is, of course, Snowflake. Snowflake shares melted by 14.7% for the session. Basically, if Snowflake was applying to college right now, they are applying as a class president with a 4.0 GPA and an SAT score, above 1,600, and guess what? They still didn't get into any colleges, certainly no target schools, not even fucking BC. Can you believe that? Snowflake, I can't imagine being in this position because the company basically came out with revenue growth of 30%, a retention rate of 127%, and record remaining performance obligations of $5.2 billion. But the market didn't like it very much because costs are still ballooning, stock-based compensation is still completely through the roof. People are upset about Snapchat for having like a 20% of revenue go to stock-based compensation. Snowflake, it's closer to 40%, so I can understand why the market is a little bit upset about that. It's juicing their cash flow numbers more than it possibly should be, but they did guide for 22% sales growth going forward for the next quarter, so still very strong trajectory going for this cloud data warehousing company. Not that I have any idea what cloud data warehousing means, but that is allegedly what the company does itself. So very tough day for Snowflake despite very strong earnings. Really, it's a valuation story. They're saying your fundamentals aren't growing as much or your margins aren't strong enough to drive this valuation, so we're going to go ahead and sell off and humble you a little bit for the session. Finally, we have Williams-Sonoma down 9.3% for the day. Very tough time to be in the home furnishing sector. You actually need people to be changing the homes in order for this to be profitable and for anybody to want to buy home furnishings. And that is absolutely not what we've been seeing, especially for those of us stupid enough to be born after 1985. What an idiotic decision, because hardly anybody is out here buying homes. But this furniture and cookware maker, they actually had dumpy-ass earnings. They deserve to sell off like this. Basically, comparable sales were down 3.3% across their portfolio of brands. They also missed EPS estimates by 1.5%. They missed sales estimates by 1.5%. EPS did somehow manage to beat, but literally nobody cared at all because guidance was so depressing as well. Once again, very tough time to be in a sector that relies on a high level of home or housing turnover in order to grow revenue, be profitable, these basic things that the market tends to enjoy. Okay, with all of that said, let's go ahead and move on into our thought banana piece of the day. I can't believe I forgot to change the image behind me once again, so apologies to anybody watching over video, but we have a very important story to discuss here today. It's arguably one of the most important stories that we've ever covered here at the Daily Peel Global headquarters. So, like I said, we've been spending some time talking about the presidency, but let's go ahead and move on into an even more famous, even more important U.S. American institution, and that is, of course, Buc-ee's. I don't know if you guys know Buc-ee's, but this is kind of like a pilgrimage site for depraved Americans. Like, we're not going to church anymore because we're busy stopping at Buc-ee's. Let me go ahead and give you guys the lowdown. This is one of the great American companies right here. Basically, what Buc-ee's is a chain of convenience stores, quote-unquote convenience stores, travel centers, gas stations, and EV charging networks. And these are all done within this plot of land that you see right here. But this company is so much more than just a convenience store chain or a gas station chain or whatever. It really is a pilgrimage site for Americans. It's kind of a marker to the spirit of freedom, adventure, and most of all, bigness, and just being way bigger than is necessary for literally anything at all. Buc-ee's whole business model is to get travelers that are on road trips. They are here for the road trippers across the American South. You can find Buc-ee's locations as far out west as Colorado. You can find them as far south as Florida. Most of them are in Texas, and they go up to about Kentucky as well. There's none in my home state of North Carolina. There's a couple in South Carolina, so pretty close by. The largest one of them all is actually in Florida and South Carolina. But nonetheless, Buc-ee's whole game plan is to be in these remote kind of rural locations where drivers are going to be wanting to stop or needing to, refill up, whether they have to fill up their car's tank or empty their own personal tank, if you know what I mean. That's what Buc-ee's wants to be there for. So they're often in the middle of absolutely fucking nowhere. That's a very interesting business model for them to go after. But they've managed to build a cult following because of this adorable beaver that they have as their mascot. What you're looking at below this beaver, excuse me, Jason Tatum, is the actual Buc-ee's location. So this fucking Walmart-sized store in these hundreds of gas pumps right here, that is typical at a Buc-ee's location. They tend to average 100 gas pumps at each location, and the largest Buc-ee's store is about 76,000 total square feet, so roughly the size of a small Walmart. Most of them tend to be in like the 50 to 60 or maybe up to the 70,000 square feet mark, but the one in Lulling, Texas, recently constructed one in Lulling, Texas, is now the biggest one. By the way, population of Lulling, Texas, 5,545 people. So you see what I'm saying when I say that Buc-ee's is meant to be in these very remote rural locations. Can you imagine going on those basic convenience store runs when you're in high school and your parents say, hey, go grab some milk or something, and you get the honor of running to Buc-ee's? That is a true blessing of the American spirit. So Buc-ee's really has managed to build this cult following again for all of these things. The spirit of adventure, size, freedom, all that different kind of stuff, and especially being centered around the American South is the perfect place to be doing so. Now, Buc-ee's, you might say, how the fuck are they building out gas stations like this that actually manage to be profitable? Well, first and foremost, they follow a similar model as like In-N-Out Burger. They don't build a new location until they own the land, until they have all the proper investments. They want to minimize the total debt that's going into these things to lower that risk. There's only currently 50 Buc-ee's in operation. And so, unfortunately, outside of the American South, they're going to be hard-pressed to find one of these things. It's actually impossible because they're just frankly not there. I'd love to see one of these in the middle of Europe, like put one outside Munich and to see what these people think about it. Or even better, probably somewhere in Spain would be even funnier, like put one in Barcelona or in Madrid, or Ibiza would be even funnier. But nonetheless, Buc-ee's, there's 50 locations. In 2022, they generated about $2.5 billion in total revenue. According to estimates, there's basically no financial data on this company that's actually out, but that's what the estimates indicate. Now, at the time, sales were estimated to be growing at about 20% per year. So if that was continued into 2024, they would be expected to pull about $3.6 billion in total revenue this year. That makes them roughly the same size in terms of revenue as Roku, Formula One Group, or H&R Block for you tax nerds out there. Whichever one of those resonates more with you, just go with that one. But it's estimated that the firm carries a gross margin of between about 30 and 40% in total. It's a little bit higher than most gas stations because a lot of the company's sales are Buc-ee's branded merchandise. And I don't know about you, but I'm not going to buy fucking a Quick Trip shirt or a Cumberland Farms hat, but I damn well will rep this beaver with pride all day long for the rest of my life. So I'll pay just about any price for anything with that logo on it. But it's also estimated the company carries about an 8% total profit margin, so that would imply that they earn around $4 million in the past year or so. So, yeah, that's basically the economic stories of Buc-ee's at a very high level. But if we start to break this down a little bit more, how does this impact employees? That would be an interesting question. I know you can't read this image right here behind me, but let me go ahead and explain it to you, because this is absolutely ridiculous. Most Buc-ee's employees are probably making more than the average American, once again, to work at a gas station in the middle of butt-fuck nowhere. So the lowest amount that you're going to make if you work for Buc-ee's is $18 an hour. That's a cashier, cleaning, janitorial, anything like that. You're making $18 an hour. For restroom crew, you're making $20 an hour. We'll get to the Buc-ee's bathroom in a second. Just trust me on that. Food service and car wash, $21 an hour. You got all these different ones. And if you rise through the ranks to become a general manager of a Buc-ee's location, you could be pulling as much as $225,000 per year. I believe this image is a little bit outdated as well, so it's probably even higher than that. You can't see these benefits, but they get a 401k, 100% match up to 6%, 3 weeks of paid time off, healthcare, part-time, plus $2 an hour for any overnight operation. So you're making a buck if you work at Buc-ee's. I guess that's where the name come from. But speaking of those bathrooms that we just talked about here, this is really one of the reasons that Buc-ee's is as famous as it is. Look at how beautiful this is. This is better than my fucking $70,000 a year college's bathrooms, and it's at a fucking gas station. It's literally, each one of these urinals, there's a full wall next to them, which is not normal in the United States. Usually you just pee into the same fucking trough, probably looking at the guy in front of you. But each one of them also has a hand sanitizer station right next to it. So if you're like me and you don't wash your hands after you pee, you can just go ahead and get some hand sanitizer right there. They also have, they were voted in 2012 to have the cleanest bathrooms in America, according to a Cintas study. That was the last time that they did it, so we can't really say too much more if that is actually the case right now. I bet a big reason that they're able to keep these so clean is because they actually keep truckers away. Buc-ee's has a no 18-wheelers policy, so that's probably a big reason for this. But nonetheless, that's the story of Buc-ee's right there. Another big reason and kind of how they achieve that spirit of adventure is through signs like this. If you can't read this, it might be backwards on your screen. This says Buc-ee's in 1,092 miles. So they have billboards up to 1,100 miles away from their locations to say, hey, we're here. And once again, that just feeds into that kind of idea of adventure that comes with a Buc-ee's location and all of their branding. So with all of that, they have been able to build a cult following behind themselves. A lot of you non-Americans out there might not be aware of this, but there's regional beef in the United States between like the Northeast, the Mid-Atlantic, the South, the Midwest, and the Southwest, the West, and the Northwest. So I would say that broadly, those are the regions of the United States. So if you're from like the Mid-Atlantic, you're going to be a stand for Wawa. And if you're from the South, you love Buc-ee's. If you're from the Midwest, it's like, what is it out there? Like Sheetz or something? I wouldn't waste my time in any of those states personally. Jesus Christ, I'm going to make a lot of you guys hate this podcast with that comment. But nonetheless, don't hate me if you're from Chicago. Either way, there's this kind of regional beef, and the South is absolutely dominating in this because they have the honor of hosting every Buc-ee's location in the world. So once again, it's this cult following. I would estimate that growth has only increased because Buc-ee's has kind of recently become a meme online of like the European mind can't comprehend this bullshit, whatever the fuck. So I would estimate that they've only grown in popularity since those estimates from 2022, so it's probably only getting even bigger, just like their store. So that's really the Buc-ee's story right there. It's a great jewel on the crown of the American empire that we can boast. So I know that this has got almost fucking 30 minutes at this point. Holy shit. But I think it was worth it so that we could get the full story of important things like, the presidential election, the Federal Reserve, and Buc-ee's location. So once again, great service to America right there. Let's go ahead and finish up with a quote of the day. We have from Mr. Jesse Livermore. He said, "The game taught me the game. and it didn't spare the rod while teaching. He is, of course, speaking about learning from experience in investing. That's basically the only way to do it. So shout out to Jesse Livermore, one of the best to ever do it. I can't believe nobody's made a movie about this guy just yet. Maybe we'll give Quentin Tarantino a call after I hop off here, which I'm going to do now before we actually hit the 30-minute mark. So thank you all for tuning in once again. You're not going to be missing any more Daily Peel Daily podcast / video streams of the day because we are back and more ready than ever. So I mean it when I say this time, we will see you guys tomorrow, or I guess on Sunday of next week. But nonetheless, happy investing, happy trading, and bye now.